A cashless society is credited with improving efficiency and minimizing costs associated with financial transactions, and countries across the continent are gradually adopting this model. Samir Hirji, the executive director of Celcom Paytech, joins us now to discuss Tanzania's journey towards this goal. Thank you so much for joining us on the show today. And just first off, for context, tell us, what exactly is merchant payment?
Thanks for having me, and good morning and good afternoon, wherever you are. So yeah, in terms of cashless payments, we're on a journey to convert the regular cash payments that typically are someone who has a mobile wallet, goes in to an agent, withdraws cash and goes and spends it, where you can actually spend it right there on platform for making payments for goods and services. This applies to both banks and non-bank financial institutions, but it's a drive that has its own way of showing up in different parts of Africa as more people carry more money in their digital wallets than in their pockets as cash.
So, Samir, what is the level of adoption of cashless payment in Tanzania right now with individuals and businesses?
We've grown from, over the last 18 months, to 30,000 merchants in a retail universe of about 100,000 or 150,000 retail outlets in the market. And as a result, that shows you that there's steady growth as we manage to convert and convince merchants that digital merchant payments, are actually not a cost, but actually a way for them to be financially included, so that we're able to look at their transactions, we can legitimize their businesses, we can look at ways to score them and to lend it to them, so they can access other credit facilities for growing their businesses and just being more compliant with the regulations in the market.
So how willing are regulators to develop policies that will drive financial inclusion?
I think we have one of the most open-minded and inclusive regulator on the continent, I'd say, or maybe even in the world. I've never walked into the central bank at the Bank of Tanzania walking out disappointed by them saying that this is something we do not understand, and as a result, we will shut it down. They've always probed us to provide more information, so that there's a level of understanding that doesn't stifle innovation or disruption in the market. And again, the landscape is completely open for both banks and non-banks, but also for fintechs like ourselves.
Right. Speaking of the Bank of Tanzania, back in February, they did launch a new payment system called the Tanzania Instant Payment System. What are your thoughts on how this worked out?
I think the TIPS initiative is a great one. It's a fantastic one. It's something that has been missing in this market for a very long time. It's a basic necessity whereby we need the free and unrestricted movement of funds amongst, and especially these are some of your tiny, small ticket items, unrestrictedly moving between banks and non-banks. We run this service for 35 odd banks in the market, and it takes a massive strain on our working capital, because we operate on a bilateral arrangement with each and every financial institution that we work with. So this is something that hopefully will also drive costs down. It will open the doors for new entrants to come into the market and not worry about integrating it every single one of these financial institutions individually. And I think from an overall market point of view, it creates a lot of frictionless movement of funds in the market. So it's a necessity. It's needed. We've been asking for it for a very long time.
Samir, speaking of costs, why don't you talk to us about the affordability of these kinds of transactions compared to traditional ways?
So I think I'm not going to go into the cliches where we're talking about, digitizing brings your costs down, or digitizing allows you to carry more cash or access cash in a better way. I think acceptance is driven by the fact that the more digital you are, the more visible and transparent your spend is, and as a result, it gives you the ability to track your spend and to manage your spend more effectively, whether you're a business or an individual. And those are fundamental benefits of being a digital society. But in Africa, we struggle to borrow when it's not a collateralized loan. So this allows you to build a credit score, and that's invaluable even if you're paying for that transaction, whether you're a merchant or you're an end user. So that helps us build a credible score on customers so that they can have onward benefits from access to credit. And again, in any economy in the world, the easiest way to stimulate the economy is to start lending aggressively. And if you're limited by only lending against collateral, then you're significantly limited. But this allows you to start lending at a micro level and growing the economy significantly.
Right. Samir, before I let you go, talk to us a bit about Cellcom's scale-up plan.
So we've been our scale up is happening a lot rapidly than we envisioned it to be. We're currently busy setting up operations in all our neighboring countries where we share a border. So we're looking at scaling into Uganda, into Rwanda, into Zambia, into Malawi, into the DRC, and Mozambique. These are works in progress, and as a result, we're riding the wave with our strategic partnership with Mastercard that allows us to go into these markets with key anchor clients to kick us off.
Right. Samir, thank you so much for joining us on the show today.
Thank you.